Welcome to Phillip Futures Market Watch. My name is Chen Hoay, Investment Analyst with Phillip Futures. In line with the other major central banks in the world, Bank of Japan left its monetary policy unchanged last week, holding off from additional easing measures. However, with the Japanese economy growing at half the pace that the market expected in the second quarter of 2012, there is speculation that Bank of Japan may take additional easing measures as soon as September if the US Federal Reserve further loosens monetary policy. At 0.3%, the quarter-on-quarter GDP growth rate for the second quarter of 2012 raised doubts about the strength of the recovery in the preceding quarter as a rebound in the consumer spending loses momentum and Eurozone debt crisis affects worldwide demand adversely. Strong GDP figures in the first quarter were supported by robust consumer spending, when government subsidies on low-emission cars drove private consumption up at its fastest pace in more than 2 years. Nonetheless, as the budget for automobile subsidies runs out, the decline of the front-loaded demand of automobiles will likely dampen consumer spending. This in turn affects the GDP performance in the second half of 2012. Exports, which traditionally drive Japan's economic growth, shaved 0.1 percentage point of GDP in the second quarter. This could provide fresh confirmation of a global slowdown as growth in Europe and Japan plunges. Without a clear resolution of a Eurozone debt crisis and with the upcoming fiscal cliff in the US, global economic growth could stall in the second half of 2012. Fiscal cliff in the US refers to the simultaneous spending cuts and tax increases in the beginning of 2013. The Congressional Budget Office in the US anticipates that the fiscal cliff will cause households to restrain spending and businesses to delay investment in anticipation of the changes, possibly reduce GDP by about 0.5 percentage point in the second half of 2012. Another factor crimping Japanese exports is yen strength. The safe haven appeal of yen underpins its current strength as investors seek returns of capital rather than returns on capital. Further monetary easing from other major central banks in the world, such as US Federal Reserve, could also lead to an even stronger yen. Several major exporters, like electronics giant Sony and car maker Nissan, have blamed the yen strength for a fall in their earnings. The strength of the currency has resulted in an approximately 20% reduction in Nissan's operating profit and caused a drop in equity price. In fact, the equity price of some exporters in Japan have reached multi-decade low. In view of the possible slowdown in domestic consumption and external demand affecting economic growth, Bank of Japan could be compelled to loosen its monetary policy further. If Bank of Japan eases the monetary policy aggressively enough, we may see a weaker yen and a higher equity price in Japan. For more information on the risk and return of investing in stock index futures, feel free to approach any representatives from Phillip Futures for further discussion. Thank you and stay tuned for more Market Watch videos.